Today on Forbes, these Trump supporters, financiers, and energy tycoons could make billions from the Venezuela invasion. After the U.S. military abducted Venezuelan President Nicolas Maduro last weekend, Wall Street watchers were quick to declare the biggest winner: Paul Singer, the $6.7 billion in net worth hedge fund manager famous for investing in distressed assets around the world. Amber Energy, a Houston-based startup backed by Singer's firm Elliott Management, recently prevailed in a U.S. federal court auction to buy Venezuelan oil company Citgo, which owns 3 refineries in Louisiana, Texas, and Illinois, plus a distribution network of 4,000 Citgo gas stations, for $5.9 billion, what many deem to be a steal. A Trump supporter who helped bankroll his transition team, Singer may indeed be the biggest winner, but he's not the only Wall Street mogul poised to benefit from the Citgo deal. Forbes spoke with several people involved in the deal, and it turns out there are other big-time players backing Elliott and Amber's bid to run Citgo, on top of other hedge funds and investment firms that are poised to capture a windfall. Elliott, according to a person familiar with the deal, is funding a third of the equity and leading a consortium of Wall Street heavyweights. The group includes Los Angeles-based alternatives investor Oaktree Capital Management, led by billionaires Howard Marks and Bruce Karsh, according to 2 people familiar with the matter. Also part of the consortium is $43 billion in assets hedge fund Silver Point Capital. Based in Greenwich, Connecticut, the firm was founded and is run by Ed Muley and Robert O'Shea, former Goldman Sachs Group partners who each held senior positions in the firm's fixed income division. Apollo Global Management, run by another billionaire Trump supporter, Mark Rowan, whose net worth is $8.3 billion, and who was briefly considered a candidate for Treasury Secretary, is leading debt financing, according to 2 people familiar with the deal. According to court documents, this involves Amber taking on $3.8 billion in first lien debt and issuing $2.85 billion in convertible notes. Also mentioned is a $25 million equity investment from an Elliott affiliate. Then there are the energy executives and tycoons who helped set up Amber, which was incorporated in August 2024 for the express purpose of bidding on Citgo. Amber's president is Jeff Stevens, former co-founder with billionaire Paul Foster of Western Refining in 1997, which started with a single plant in El Paso, Texas. Stevens and Foster later sold Western for $6 billion in 2017 to Endeavor, which was then run by Greg Goff, Amber's CEO. 2 years later, they sold Endeavor to Marathon Petroleum in 2019 for $36 billion. Goff and Stevens, who held on to Marathon shares, got to know the energy team at Elliott, led by John Pike, when they were all on the same side of subsequent activist agitation against Marathon. They first succeeded in pushing CEO Gary Heminger to retire in 2019. The parties then helped orchestrate the 2020 sale of Marathon's subsidiary, Speedway, which operated 4,000 filling stations at the time, for $21 billion to the Japanese parent company of 7-Eleven. Elliott has also spent years agitating at Phillips 66, in which it owns $2.7 billion in shares, and pushing for asset sales. Amber's winning bid for Citgo was controversial long before Trump's latest move. After a decade of litigation, months of testimony, and a lengthy auction process, U.S. District Judge Leonard Stark in Delaware, who issued a 168-page opinion explaining his decision, ruled in Amber's favor, despite the fact that its bid was $2 billion lower than at least one rival. Its biggest rival for Citgo was a consortium led by a small Canadian mining company called Gold Reserve, which had mines expropriated by Venezuela's late president, Hugo Chavez, in 2011, and which was initially backed by fellow creditor Koch Industries. Gold Reserve Executive Vice Chair Paul Rivett is still angry that he didn't win the day with a bid of nearly $8 billion. Rivett, who says he had financing from JP Morgan lined up, asks, quote, "Why is it that Citgo is going to a lower bidder? It should have never happened." For full coverage, check out Christopher Hellman and John Hyatt's piece on forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.